Hello, Master Traders. Dr. Daniel Daves here with you. It is Thursday, the 13th of June, 2019. Welcome to the Master Trading Room. Also want to welcome all of our alumni, anyone who has ever taken classes in the past with me. You have been invited out to these classes tonight. Next week, also Tuesday and Thursday night, just would like to spend some time with you and go over some of the trades that we've done. I've done for a long time, as well as a little bit of new. We've got a couple new things that we're going to talk about, and this is a good time for new students and old alike to brush up on the system and on the technical trading system that I offer. So, without any further ado, let's jump in here. I'm going to show you some charts here from the eToro system. If you've never heard of eToro, eToro.com, this is a group. You can kind of see them right here. eToro.com. These guys offer a pretty cool system for free charts and trading. Free charts. And they do charge a little bit of a spread when you get involved with their trading platform. And it's enough of a spread that we as traders, if we use eToro, we do not trade anything less than a 10-minute chart. Anything bigger than 10 minutes, that gives us a big enough swing that we're looking for, where we can cover their trade setups and then also make some good money. You don't want to pay all your profits to the broker, that's for sure. eToro offers a great set of tools, and again, all of that is free, and you can set up your account real easy. Now, if you are from the U.S., North America, at this time, the only thing that eToro allows you to trade, this is my understanding, is the cryptos. However, they are working and moving on, allowing other markets like the S&P and all of that. Because I live in Panama, I am able to trade everything that they've got. So I'll show you just a little bit. Here's a watch list that I have, and so this is just some of the favorite stuff that I have. By the way, Dawn, I saw that you said not loud now. Hopefully, is it loud enough? We got enough noise here, or do I need to bring it up a little bit further? If you guys think that I need to go a little louder, I certainly will do it. What do you think? Is that a little bit better if I come up higher? Oh, leave it? Okay, we'll just do that. Thanks. Super duper. Okay, so as you can see on my watch list here with eToro, and this is just one of many brokerage firms. They're out there trying to get your business, and really there are some more out there that are a whole lot cheaper. Their spreads are better, but eToro is a great place to learn. And it's a social media platform, so you can talk with other traders, and it's also a copy trade deal, which is kind of neat. You can go out and find a guy that's been doing real well, and there are some master traders out here, and you can just say, copy whatever he does. You got $1,000 in there, and he's got $1 million. When he takes a trade, his is a big trade, yours is pared down to your $1,000, and you just copy and walk right along with them. You can copy trade these guys. Kind of neat. It's a neat platform, and you can talk to other people. Show that in just a second. So S&P, Nasdaq, Dow Jones. Here's the UK 100. I've got some of my cryptos that I watch: gold, silver, US dollar, Apple, oil, Tesco, Amazon, Google. Just a bunch of these guys that I like to look at and sometimes like to play them. Here's Tesla. And of course it says up 2.2%, up $4.65 today, trading at $213.35 or $213.77. If I'm buying at $213.77. So as you can see, there is a 35. There's a 37-cent spread on this $213 stock. That's their charge. They don't charge per trade. They just charge the spread. So if I want to buy, I buy at $213.77. If I want to short it, I'm selling at $213.35. And they get what's in between. It also kind of tells you who's buying, who's selling, and retail traders are always on the wrong side of the market. So, right now S&P 500 is getting ready to blast up and hit new highs potentially, but 62% are selling the S&P. That just kind of tells you where the retail boys are at. They're getting their butts beat, and they have no clue. But anyway, so that's there. I also have some. There's quite a few cryptos here that this thing trades. This trades CFDs. It's not actually trading the stock or the futures symbol. It's trading a CFD, which is I can't remember exactly what it's called, but basically it tracks along almost exactly with the actual S&P 500. Sometimes it falls a little behind, not much though. It's right up there. So S&P 500, as you can see here. So here are a whole bunch of people talking, and you can get in there and comment and talk with them. They all got their ideas, and or you can place your own. Like I could come in here and write a post right now, add a comment, and kind of neat. Or let's just say here's the stats on the S&P, and then the chart. I can click on the chart and go into all the details. There's all kinds of settings. Here's all your studies and tools, Fibonacci. It's all in here. Just choose what you like. So what's really cool too is with the mouse I can go really fast. This is a daily chart. I can go down to 1 minute. It is all time based, no tick charts. But pretty cool. And what's neat for channels, we're going to get into channels in just a minute. That's as you can see, I can just draw channels pretty doggone easy here, and move them where I want to, move the angles. So they've got a really great set of tools that you can use. Love it. So I also still use, of course, TradeStation, the Cadillac of all charting systems, but eToro is what we like to play around with. All right, let's take a look here at, while I'm on TradeStation, the S&P 500. This is the bellwether for all U.S. markets, the top 500 companies. We're going to see where are we in the world. Well, the market came up here 2018, a little pullback. Went up, broke new highs. We had, this was literally officially, if you all remember, the crack run was in place. And the crack run failed right here. And sure enough, boom, lower low, bang, lower low. And then a smack up. December 25, we hit what was called our predator play to the tick, and it called the bottom on the weekly chart all the way up until just last month we broke all-time new highs in the S&P. Now we got a pullback, didn't quite pull back to the 38%. It was so strong it came down. There were some other reasons that it didn't hit the 38. We might discuss those later here, but it was all based on the predator play. And then, of course, boom, we're heading up. Buyers are fully intent on breaking new highs. Sellers want to get down, break the back of the buyers, but man, the sellers, if you take a look at this chart, the sellers have not been very good now for, I don't know, maybe 50 years. They just keep losing to the buyers. Okay, so with that, let's come back over here and get over to the eToro. We're going to break in a little bit here and see if we can figure out some rhythm in the charts. Now I put a little list together over the next 3 nights here to talk along with student traders and with alumni. So of course we want to here we go. Definitely I need to bring this over. Want to welcome the all alumni, and then I want to talk about 3 market seasons. This is something that I started teaching about 2 years ago. I fully identified 3 market seasons which are dramatically different, and they require that you change your mind and change your trading style depending on what season you're in. Good news for us, we are the first to know when the season changes. And most people don't have a clue, but remember, we're talking about giant tracking, and the giants are the ones who make the seasons change, and we are tracking the giants. So when the giants move, we know what they're doing. So let's talk about the 3 seasons. Season number 1, we call it range season. And ranging is when the market is moving really nice up, boom, 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 right? And it's very calculated. We might call it a perfect scenario for the bounce 5 channel play. 1, 2, 3, 4, 5. Boom, up to the 4. 1, 2, 3, 4, 5. Bang, down to the 4. And we end up with channels that 1, 2, 3, 4, 5. And we know the zone. We take it, boom, and it comes up to the 4 and fulfills. And then it's created another one. 1, 2, 3, 4, 5. Right? Did I do that right? I may have actually done that wrong. Boom, boom. We'll call this one the 5 down to the 4. And when this happens, we're in the range season. Season number 2, though, is when the market breaks out. And we've been doing range. We've been having fun back and forth. And then all of a sudden, when one of our channels, we have a bounce 5, and it comes up and beats around and gets up higher and breaks new highs, and all of a sudden, here it goes. That's season number 2. We call that trend. That's the trending season. And in the trending season, the only time we would ever use a bounce 5 channel is if the market comes back and gives us a bounce 5 buy up to break new highs again. That's the only time we would use it. When the trending season starts, we turn off all shorts. We don't think about going short. We only think about every pullback buying to new highs. And then we'll figure out when that's over. When the trend season ends, we'll be the first to know. But until it does, we need to ride the train, baby. We call this also the crack run. That's the crack run play. Or the hyper-fueled crack run. Something happens and a breakout takes us where the market just goes insane crazy, and one group is taking over territory and the other group is running for their lives. The 3rd season, first range, second trend, 3rd season is called whipsaw. And the whipsaw season is a horrible season for almost all traders. And so the whipsaw is when the sharks start feeding, and they circle and circle and circle, and there's blood in the water, and they tear up everyone. No one makes money in the whipsaw season. We don't always get a whipsaw season, but when we do, it's a radical, horrible season. Now let's find a little bit of each of these 3 seasons. We can probably do it in the S&P 500 here. Actually, S&P has been in a quite a rip for quite a few years. But we'll go back here to 2015, and we can see down here that calling the 2. Let's see here. Can I get in closer? And I won't take time to get too crazy on this, but basically, if I drew these lines, 1, 2, 3, 4, 5, outside the line 5 comes right down to the 4, and then we get a 1, 2, 3, 4, boom, 5 headed up. And we're going to talk about that because that was season change. But look at this other, the other one that I had drawn. Let me redo this. 1, 2, 3, 4, 5 down to the 4. Here we have a 1, 2, 3, 4, 5. It starts heading up and fails down to the 4 because of that initial one. So here we are. We're in the season, and actually, this channel right here, its goal, redraw that again. Now this channel seemed to have failed. 1, 2, 3, 4, 5, back up, failed, back down. What's the goal? 4. 1, 2, 3, 4, 5. That was the initial 5. Beautiful. It came back down, kind of failed in the zone, but really it caught fire again, came right up to where? Right to the 4. So it's moving in rhythm, but that is the range season. When you're in the range season, you basically can trust your bounce 5 channel play. But when we break out, let's see if we can, let's just do a straight channel here. All right, we'll just call a straight one here. 1, 2, 3, 4, 4, and it did drop down a little bit, but it basically, we just call it a sloppy 4. Basically, we still have a channel in here, and here we come. Bam! 5. There's the bounce 5. Bounce 5 at or beyond the line is our play. Short. Came down short. Here it comes again. Bounce. Pull. Up, higher, high. Down. Boom. Up. Up over the line again. Bam! Straight down. Back up again. Now, when this happens over and over and over again, those buyers are relentless. Pull back, higher high. That signals a crack run for us. So what, in effect, this line that the sellers held, the buyers rocketed up and kept breaking new highs. The sellers are on the run, so we turn sellers off. We turn buyers on. Buyers on. We're in a crack run, a hyper-fueled move. The buyers are taking over, and they're not taking no for an answer. And so now here we cut. Here's your pullback to the line. Tried to come up a little more. Another pullback, and then bam. Rocket launch. Bottom line is, crack run is in full effect. Let's take a look at what happened. Okay? Up, 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 crack run, up. So here for a couple of years, we were in a crack run. By the way, guys, I hope you're still hearing me. We just lost power in the entire Boquete community. So sorry. I'm going to give this a few minutes, and then I'm probably going to call it off and hit save for just a moment. We'll see if we can get our power back over the next 30 minutes. If I do, we'll fire back up and we'll keep going again. I am so sorry. Viva Panama. So we entered into a little period here of back and forth, up then to new highs. But then this whole crack run fails and fails hard. What we call here, we call this the whipsaw. Down, up, down, up, down, tried up, and fail. No one wins in that period. No one. Pretty crazy. We did a whipsaw today on a day trade, and I told the students, I said, if you are ready to buy, and we were, I said, first of all, you run for your life from the whipsaw. Just get out and wait for it to even back out again. Or the other way to trade it is if your rule says buy, you sell it. You go opposite of your rules because the whipsaw is going to kill everyone. It's the sharks and predators in the pool in their frenzy. So we did, it was time to buy on a bounce 5, and we sold, and we made money. All right, so after the whipsaw was over, boom, big down, and we hit what was called a predator play. And we also, I'll show you part of a bounce 5, and then it's just been up, up, up all year to new highs. And look at that. We just got our power back on again. Very good. Thanks, Kevin. I see you. Looks like you. I've got everything, including my modems, are on a power supply. So I've got about 10 to 15 minutes to keep going if the power goes out. So you can see, we had way back there, we had range. Then we had trend, crack run. Then we had whipsaw. And then we had bang, trend. And now, boom, trend back up again. If you know these 3 seasons, you will know which system to use or to run away. Now, just to show you one last thing, we were watching was here to here. Okay, see that? We had a high and another high. We pull this down, and we ended up with a bounce 5. Now remember, the crack run came to an end, so it's lower lows before lower highs. And so we ended up with a 1, 2, 3, 4, 5, a little pullback, and boom, down. December 25 low, and then here it comes. In our bounce 5 channel trade, we usually say at or beyond the line is the trade. That's where we take it. It looks bad. It looks ugly. The news is telling you it's a sell-off, it's a crash, and that's where we are buying. Ho, ho, ho. And sure enough, slam straight up, up, up to new highs. It only took 6 months to regain from 2350 to 2950, straight up. Pretty powerful. So you can see the bounce 5 works. It shows the zone where we're trading, where the buyers ultimately should 78% of the time show up for a buy zone. The bounce 5 channel trade is the basis and the centerpiece of everything I do. This was the first thing that was shown to me as I day traded. I saw the channels. Saw them working. And they still work over and over again. Now, let me go ahead here. I don't see study 2, moving average. Let's do a 50 red, and let's do a 200 blue. Simple moving average, simple, nothing crazy, nothing insane, just a 50 and a 200. Let's go to the weekly chart, and what we will see here is on the weekly, we ended up with, there's your 200 rising moving average. We have what's called a predator play. See my predator play over here on the list? The predator play is anything under a rising 200 moving average, we buy. Everything over a descending 200 moving average, we sell. So the market is coming in an absolute onslaught sell-off. In December, 1, 2, 3, 4, 5. There's the bounce 5. It looks really bad. We're coming down. Boom, boom, boom. December 25. Merry Christmas. We're under the rising 200 moving average, but only for a moment. And while I am saying to our Telegram group, do you have the guts? And I posted Bruce the Shark. I said, here's the predator play. This is it. Do you have the guts to take the trade on the 25th of December? It takes guts because everything's falling apart. But here it comes. It slams back up again. And as a matter of fact, I think it was 3 hours after I called the predator play, President Trump tweets, "This is a good time to invest in America." He literally called the predator play. And from there, it exploded upward, and that was the bottom for the next 6 months. That's powerful, the predator play. And it's pretty simple. The rules are, if the 200 is moving up and the market falls under, the predators, the sharks, will chase it back up to the 200 moving average. I think of it as Nemo kind of venturing out of his little coral reef, and Bruce the Shark chasing him back into the reef again. And this happens over and over. If the thing falls once, it shoots up many times. Sometimes, and if it comes back a second time, we let it go lower. And then we get in, especially when we see, and it looks like we're turning around. And boom, back up again. They defend. The predators will defend over and over until this thing finally turns. Once the 200 moving average turns down, the predators jump to the upside and start defending the up. It happens in every market, every time frame, over and over. It's not 100% successful, but it's in the 90s, and that's good enough for me. So let's see if we can go back to a daily chart on the S&P, and let's just see some predator action here. We're going back here to 15, let's say, 15. So here is the 200, bam, under, slapped back up. Bam, under, slapped back up. Strong, rising 200. Down, if you get in here, you'll see it hit it twice on two different daily moves and slammed back up. Down, slam, down, slam. Down, moved up, down lower, moved up. Now this is even in the whipsaw season. Under, moved back up, and then it turned down, which means what? That the predators jumped above, and this thing then fell low. There were no predators here to chase it back because they jumped above on a descending 200 moving average. Is that not crazy? But the storyline works. So from there, headed down, and then it started back up again. Under, slam. Under, slam. The predators jumped under and protected. Here it hit, came up a little, fell under, bam, came up again. I think that if you look at any stock, any futures, any chart, and you look at a simple 200 moving average, you don't even have to put the 50 moving average on there. It has nothing to do with the 50, just the 200. Is the 200 up or down? That will show you where a secret range of giant buyers or sellers are located. Is that not powerful? So, I don't know. Let's go to a watch list. Let's go down here. I like Tesla. I got to drive one 6 weeks ago. Blew my mind. They put it on autopilot, and it drove me home. I was not allowed to put my hands on the wheel or the gas, and the Tesla drove me home at 70 miles an hour. Down one of the major highways in California. Unbelievable. Made me a believer, and I wanted a Tesla. Now here's a daily chart on Tesla, and let's see what happens. Again, it's not 100%, but if you get comfortable in trading the predator play, here we are, a strong moving 200 moving average. Look at this. Under, back up. Under, back up. Under, back up, under, slam, back up, under, back up, and then it turns. It turns downwards, and all of a sudden, boom, 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 boom. There was no predator here because this thing had turned south. The predators are up here. So as it's heading down, slam, up high, boom, back down. I tried a couple little ones. Slam, up high, boom, back down again. Tried it again. Slam, up high, boom, back down, and now it's starting to turn up. So everything under gets bought back up, under gets bought back up, and then it falls, and the predators are up here. That's why it fell like a rock. There were no power players to buy this and chase it back up to the 200 moving average. Look how Tesla, just playing the predator play, and the real goal for me, I mean, at the end of the day, the real target is be patient and get it as low as you possibly can. If I'm on a daily chart, I trade the daily, I stay on the daily. And so I see it coming down, and then if I see a little bit of green coming back up, it gives me confidence to know that the big down move is potentially over. It allows me in where I can get back up on the move. And when it hits that 200, I don't let it ride, baby. I take it off religiously, technically take it off. And if it falls back, if it looks like that the fall is over, I slam it back in again. If it comes down another time, I make it go lower than it was before I get in. I try to judge, is this turning around? And indeed, did some big boy buyers come in and buy this thing up and turn it around? That's my secret to success. I don't just buy crazy if it dips under just a little bit. I let it fall, and then I look for some sign. Matter of fact, let's just look here. So just looking at this daily Tesla chart, we're falling, and then all of a sudden we gap down. Oh, we got to love gaps, because gaps are filled a lot of times, right? So if the gap is filled, then indeed, to fill that gap, we're going to have to get back up to the 200 moving average. Well, that's a real confidence booster for me. I got another reason that I might want to buy this. So then I kind of end up with a red doji, and then it kind of goes green, red, green, red. Look at this. A green doji. It looks to me like the onslaught is over, 200 rising. I know that the predators are thinking, the big boys are thinking, let's go. And here it is. Bam, pullback, boom. Actually got they got the gap fill, and the 200 closed in the same day. So now here it comes back down again. Boom, boom, boom. Tries. It couldn't quite hit the 200. Comes back down. Kind of ends. Here's a green, and then, wow, it looks like it's going. Let's take it. Slam up. Take the profit. So you do have to get used to this play. This predator play is something that you have to kind of develop yourself. Patience and sitting on your hands will do you wonders. Now, let's go down just in the event. Let's go down here to a tick chart on, let's see, channel plotter. Let's go down here to the S&P 500 today, and let's go look at let's just look at this predator play. Here we are. And let's see if we could see kind of the same scenario. Descending 200, predators are up here defending this black territory. The market shoots up and hits, pulls back, bam! Up, up, up a little red, a little double top, pull back, comes back, whoops, well, I think right in here, this is the zone. And look at this. So if this was a tick, if I was on a tick chart, futures, and I shorted this somewhere in here, bam, down to the 200, and I got out, I made about 1.5 points on the futures symbol. Great money to make just on the predator play. Notice also the 200 now, in the middle of all that, has just turned upwards. Turned upwards, so where is it? Bam, protection, bam, protection. Moving down, down, back, down, back, down, back. And now it's turned down, so the predators are defending above. There are ways here in especially a ranging system where the market falls a little too fast out of underneath a rising 200, or it rises too fast on a descending 200. That's where the predators, the big boys, the giants, love to get in on overbought, oversold. If you can get your feel with this trade, you'll be very happy, because again, not always does it work, but over and over again, in the 90% range, it does work. So here's a descending 200. Predators are here. Market runs up over the 200. I'm sorry. Let's back that up. This here is a 50. Let's go to the 200 here. Let me see. Yeah. Let's back it up a little. I should have deleted that 50 just trying to talk. Okay, so here comes the 200 descending 200. Boom, up, it tries. What's happening here? Well, buyers are trying to buy in, but sellers are selling into where? Bam, down to the 200. It briefly starts moving up. And so as it does, boom, under to the 200, under to the 200, under to the 200. Now it continues to rise, under, up, and beyond. So you see how that plays. It's purely technical. It's, at the end of the day, looking for overbought, oversold. It's looking for the big boys that say, you know what, that's a super good buy on this time frame. I'm going to take it, and I will sell it in a minute. And so the 200 moving average is that is the only indicator you need to run a predator play. Now, one thing that eToro has, let me see if I can pull up here. Okay, here's a login. No, it logs me in automatically. Okay, let's just try this. eToro app. Get in here too. So eToro has a beautiful app. Works on an iPad, iPhone, smartphone, Android, and with that, you can come in. Let's see if I can find a chart. I do predators all the time, just with a 200 moving average on my phone, and I just check it over. I just check it from time to time. Wish I could show you a picture of my phone here right now, but and I don't see a chart here on the phone. But it's real easy to pull a chart up with your 200 moving average. Done deal. You get the point. I won't stay too long on this. Come on, show me. Just show me a chart on an iPhone. Here we go. Okay, so there you go. There's your chart. You can dial in and say, give me a moving average, put a 200 on there, and you can play all day long. And of course, this is a Forex chart, but you can play cryptos. You can play if you're in the U.S., you're playing cryptos on eToro. If you are anywhere else, you can play it all. Viva restrictions. Sorry, U.S. That's just the way it is. Okay, for tonight, with the predator play, got the. Let's see here if I can pull this up. We've done the predator play, and let me go ahead and give us just a little brief example of the Bounce 5 channel. Just for a refresher, in case that you forgot, let me see here. Yeah, let's stay here in S&P. And we'll come into, let's just do a 10-minute. I'll show you our 10-minute season that we went into. All right. So on the 10-minute bars, here's the beginning of the day. So the market starts moving up. It's moving up, up, down, up, down, up, down. Now, when you see a market hitting over and over, hitting both tops and bottoms, where are we? Do you see W's in there? This is the whipsaw. No one wins in the whipsaw. And the predators make sure that everyone is stopped out and loses money. Only the predators make money. That's why if you determine you're in a whipsaw, you either walk away, or if you've got the guts, you reverse your trade, which is hard to do because you believe in your trades. You believe we're going up, so why would I sell when I believe we're going up? The only thing that would stop that is if you also believe in the whipsaw. So let's see. So, let's just say everything's going up and we're like, oh man, we just broke a new high. Oh, we just broke another new high. Oh, we just broke another new high. Okay, I'm in. So the next pullback, I'm in. So you're buying. Buy. And you're like, oh, here we go. And then all of a sudden, bam, flush down. And you go, oh no, sell, I'm losing. Sell. It hits the predator play, of course. Hits that, and then you're like, oh no, we just broke new lows. Okay, I'm a seller. Okay, so when it breaks the new low, I sell. And then here it comes. Bam, bam, bam. And you're like, oh no, I'm out with another loss. And it pulls back, and here it goes. And you're like, oh, yeah. Okay, we're breaking new highs. I'm in. So I bought here. I don't want to miss out. I got to make up some money. And then bam, 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 down again. Oh, no, I'm a seller. Everyone's a seller. And then they're like, okay, I think it's good. We're going down. I'm selling. And then boom, 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 boom. Do you see what's happening here? People are just getting shredded, and their emotions are being pulled, and they can't make a trade right. When we determined today that we were in a whipsaw, I think it was this one here, this channel. I said, all right, guys, here we are. It was on Telegram. 1, 2, 3, 4. Oh, here is another 3, 4. Bam, outside the line. There is your bounce 5 channel. Let's go. Oh no, bam, it broke new lows. Oh no, boom, let's go. Okay, it looks like the 5 worked. This is right where we were, and I said, here's your bounce 5 in the middle of a whipsaw. What do? We buy at or beyond the line. But because you're in the whipsaw, you will either get out and don't trade, or if you've got the guts, when you're supposed to buy, you sell. So I pulled it up, and I actually did some photo shoots, and I went on a paper trade, and I said, okay, let's just sell it. So we sold it right here, and this thing came up a little and went slam down, and it was good for 4 S&P points. When we should have been buying, we sold. Why? Whipsaw kills everyone. We went with the predators because we knew what season we were in. All right. So, but then, of course, eventually, it came back and went up and hit the bounce 4 and fulfilled, but not before a whole lot of pain and a whole lot of buyers selling to exit. Okay, so let's see here. This is another one in the whipsaw series. Let's see if I can pull it back here. All right, so in this we're 1, 2, 3, 4, and it comes down and does not quite get to the 5 and starts heading up, and sure enough, it heads straight to the 4 and fulfills. Oh man, we are doing good. Let's go. And then, of course, that's when the sharks started taking them out. Everyone thinking, we're going to break new highs. We're going. But the whipsaw season said, watch out, watch out, watch out. Make sense? Okay, and so right now, we're still in a whipsaw season. You can kind of almost here see Bart Simpson. But Bart was not allowed to continue. He wasn't allowed to continue. He was violently turned around. Why? Because of the whipsaw. Okay. Very good. So you saw the little education piece I did there today. And why? Because we're just getting shredded. And if I see something like this, I just kind of walk away unless, I've got just a little bit and I want to prove it once again. I'll go opposite of where it's supposed to go, which is very hard for me to do because I have trained myself with 100,000 channels. When I hit the channel zone, I'm a buyer, period. So it's hard for me to hit the channel zone and sell. Okay, let's open this thing up for some questions. Feel free to turn on your microphone, or you can type in any questions on the predator play, on the 3 seasons of the market. Would be glad to go over that. And then again Tuesday, we'll go over a little bit more on the bounce 5, We'll show the hyperfueled crack run when it starts and when it ends. We'll try to get to the Trinity play as well. We've also got the triple pillar turn play. That we just started doing that in the last year. Batman and Bart Simpson are two old plays. You saw me just draw out Bart Simpson. And Batman and Bart Simpson, when they show up, they're strong indicators as to where the market wants to go. All right, anyone on chat or vocal would like to jump in? If anyone would, feel free to shout out or type in your questions. We want to make it crystal clear. I promise you that my first three trades, bounce 5 channel, crack run, and the predator play, those three carry very heavy rules. Very heavy set of rules. And they're, well, actually in the triple pillar turn play, that carries a heavy set of rules also. The other two, Batman and Bart Simpson, those guys are a little more, they're more of a, do you see this, get ready for a potential move the other way. But those first have heavy technical rules that keep us safe. All right. Heavy rules. Of course, the bounce 5 channel play, hyperfueled crack run, predator play, and the triple pillar turn play. That has heavy rules to it. The Trinity play, there are 3 places you're allowed to get in, but there's no hard rule that tells you which one. You have to determine your own risk level on Trinity. Batman and Bart Simpson are 2 things that show up in the markets that tell you, they give a great big pointer sign, but they don't really give you an entry. You need to use one of your other systems to get your entry. So if Bart Simpson is pointing up, then we'll start looking for a bounce 5 channel that lets me get in with the least amount of risk going up. That's the theme there. Sure. Uh-huh. Okay, well, to do that, we'll go back to the big failure in 2018 at the top. This was a bounce 5 channel, but it was also, you know, this shows you how when buyers get tired and after a big crack run it gets old and there's no more hyperfuel in their veins, they can box themselves in, and the sellers are waiting for they're waiting like hyenas for the buyers to box themselves in with a little bit of weakness. And that's exactly what happened right here, as this market just kept burrowing. New highs, new highs, new highs, new highs. And then here, this little box in area, they have this little pullback and tried to break a new high and could not. This is where the sellers have been waiting and waiting and waiting to pounce. Why? Because the rules of the crack run require that all support is held. If you fail support in a crack run, then it's no longer a crack run. Why? Because a hyperfueled run, the buyers, the computers, the AI trading, everything holds all lines. They are waiting not very long to buy in for new highs. They're on. So when we ended up with a straight across channel, which is 2 highs, which are going to end up being a 2 and a 4, when we end up with those, when that straight across channel in a crack run, the hard set rule is this bounce 5 must be held to the T. It cannot fail. If it fails, the AI, the giants, the big computer systems were not there to support that line. They didn't buy it, which means it's going to go lower 90% of the time. What happens? Fail, pull back in. Next day, fail, pull back, fail, pull back, fail, and then the big fail before we got a green candle back up again. So, so the straight across channel is actually not quite straight across, but almost exactly. So whenever you're drawing a channel, and the rules of course, we enter the channel in 1. We bounce on 2. We bounce on 3. We bounce on 4. And we are supposed to bounce on 5. And that depends. If we're in a trend, crack run, we have to hold 5. If we're in a range, season 1, where we're moving back and forth, this can fail. And it actually should. So you can get in outside the line because we're just trading rhythm. We're not trading hard, solid lines of support. So in the range season, if it fails the 5 and comes outside the line, that is the beautiful, that's the oversold where you want to be in season 1. In season 2, the trend, it's over. When you see that crack through, you know that the buyers did not hold that 5 line, and you start looking for a way, as it comes back up, you're looking for a way to break new lows. Wham! So we were the first ones to know when the S&P ran out of steam and the sellers boxed the buyers in this little tiny range, and they cracked them right here. We knew right here it was over. 4 days later, massive fallout, fallout, and fallout. So now, if you are, let's go back to I don't know, a 1 hour chart. Let's go back somewhere and see if we can find just a range. Now, this is important also in the bounce 5. A bounce 5 channel is always a move up followed by a channel down with the goal to go back up. Or it's a move down followed by a channel up, or worst case, sideways, with the intent of going back down. A channel is never up followed by up followed by up. Sometimes new students fall into that mistake. And let's see, like here. Here is an up followed by an up, down, up. It's getting kind of funky here, but that is not a channel. A channel would be up followed by boom, 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 and further up. So whenever you're drawing your channels, make sure that you, let's say, like there was a channel right here. We're coming down for an up channel. So we come down, 1, we enter, 2, 3, 4, it went up outside the line, 5, and it fell way back. Actually, I think it fell back to the 4 and fulfilled before coming back up and starting a crack run. Let's take a little closer look at that. Interesting. Yep, it sure did. I'll draw the official channel. Movement is down, and so we have a low and we have a higher low followed here by, let's see, this low right here. One, 2, 3, 4, bam! Bounce 5. I'm going to draw it off a little bit here because it went way outside the line. And while everyone is thinking up, we are thinking down. Outside the line is a premium low-risk opportunity, And so right here between 29.25 and 29.29, you have a 4-point area outside that channel to take this trade short. 78% of the time, it will come back inside the line, as it did. So it came back to here. The very next day, it runs up, gets pushed back down, down to where? Down to the 4. It completed in that very next day the bounce 4 target. Then what did it do? Bam! Up, pull back, up, pull back, up, pull back, up. Here we go. So there is a down movement into an up channel. See if we can find an up movement into a down channel. Yes, we can. So we had this nice strong move up, and actually here is a high. Here is and so it looks like we have a 1, 2, 3, 4, 5. We have 5 hits on this channel, and I would imagine we're probably, let's see, are we in a crack run is what I'm thinking. Well, I'm going to take this low, draw it again to that low, and end up here. So no, we're not in a crack run. All right, so here we go. We enter 1, 2, 3, 4, boom, and look at this, straight up. 5, pierce through outside the line. Now, do we get from here, do we get a higher high? So we get a pullback and a higher high to signify a crack run, that we're changing seasons. We're no longer in rhythm. No, we don't get it. The sellers deny them from ever breaking another high. At or beyond the line is the short. Now, it was a little scary. This is hours, so it took hours. Sat on it. Here we go again. Nope, denied. Nope, denied. It had to have been scary for anyone in this trade. But surely, finally, inside the channel, inside, and boom, here we go. Now, the big target for rhythm was the 4, but it did not allow a 4. It turned around and started running the other way. The good news is, once you get this down into your target, you set a stop below your entry, and then you are guaranteed a win. And as it starts coming down, you can lower your stop, lower your stop, and if it slams back up against you, you take that profit, walk away, and call it a loss, and you kept your money. Okay, so up results in downward channels or straight across. Down results in upward channels or straight across. Okay. Don says, how down below bounce 5 do you allow it to go before getting in a trade? That is going to be your determination on this last example. Pierced straight through it. Let's call that 20, probably 24. Went all the way to 33. There's a 9-point spread in here. 9 points. Typically, what I teach is a 3-to-1 minimum trade. So your target is down here at 29.95, let's say, 95, and we're entering somewhere up here at, I'm sorry, that's 28.95. Then we're entering somewhere between 29.27, 29.36. So let's just say, cut it in the middle. Let's just say you got in at 29.31. All right. So now you do have to set a stop. You need to set a stop. but you want a 3-to-1 reward risk ratio. So if I'm in at 29.31, I'm trying to get to 28.95. That's a 36-point shot that I'm shooting for. I have to be willing to risk 12 to make 36. So I'm risking 12 to make 36. Minimum. If you can get away with risking 1 to make 4, then you'd be willing to risk 8 for 36. Is that right? Well, that's 4.5, I think, actually. So you always want to look, if you've got a 78% play, you want a 3-to-1 risk-reward ratio minimum to stay in profit. So now, I have learned patience over the years through pain. I used to, when I was just ready to trade. I wanted to trade. I didn't like being out of the market. I wanted to be in. So I was trading to trade, not trading to make money. So I would take anything. If it touched the line, I would take it, baby. And then many times I would suffer. Now, I'm just not interested in the line. A lot of times it comes up, bing, hits the line, comes right back down to the target, and I go, wow. I used to say, oh, I missed that trade. Now I say, that was not my trade. Why? Because I am patient and I am a predator. Predators do not like to expend much energy. Let's just call this a big coral reef, and here's a hole with a little predator inside. And it's all dark, and all you see is those eyes. And the little fish is coming around and like, ooh, there's a hole. And he goes back, and the fish comes back around. Ooh, I wonder what's in that hole. And he gets around. A predator does not want to spend too much energy to catch a fish. So he waits and waits, and once the fish comes right to him, bam, a little bit of energy, boom, and he's got his fish, he's got the prize. Predators don't spend a lot of energy to get their prize. So I've made a determination. I want to be a predator. I know where the zones are, and if it gets way outside the zone, then I'm getting really, really happy. And that's where I like to take my trade, is as a predator. So I'm expending just a little energy for a great big potential. But in order to do that, a predator, even if he's hungry, waits. He waits for it. He waits in the hole, waits for it to come to him, and then he springs on it with minimal risk. I hope that makes sense. That is how I trade. So people that are addicted to trading and they trade for the thrill, they are not going to be able to sit on their hands like I do. I used to be addicted to trading, and I just traded to trade. Now I trade to profit. So I'm much more patient, and patience pays off. All right. Okay, let's see. Any other questions here? Did I miss any? Whipsaw. I've got here a whipsaw question. Whipsaw begins when bounce 5 does not touch down. It almost made bounce 5, but didn't. No, the whipsaw actually, you'll determine a whipsaw once once the low goes to the high, goes to the low, goes to the high. Once we start doing this with just little baby breakouts, or maybe not, but we're going back and forth, I mean, what is that? So if I buy this here, it's barreling down, and I'm having to sell it just to try to save myself. And then I'm selling it, but then I'm out as it goes back up against me. And then it comes down, and the sellers are selling it, and then it's coming back up against them, and they're buying to exit. Everyone is trying to preserve and protect themselves in the whipsaw. So if you determine that, like, wow, nothing seems to be working. I bought it and it's going against me. I sold it and it's going against me. And I feel, quite frankly, a little confused. If that's you feeling confused, you might be in a whipsaw, and you need to step back and say, maybe this is not my day. Maybe this is not my trade. Maybe this is not my my index. Go find something else. So here we were. Bam, 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 up, and then fake out down lower. That was brutal. I mean, I was training students. If you all remember, some of you may remember that. I was training you through this, and I was saying, back up, don't trade it. It's a whipsaw, up, down, up, down. The good news for us was that we had predator play. So up moving, we had the predators that hit over and over. We actually had this one as well. The market started moving down, and we had a predator down, and another predator down. So we had a few places we still could take trades in the whipsaw, and we were very successful with it. But the bounce 5, the standard channels, get out of the way. And this is a daily, man. We barrel down to a 1 hour or a 10-minute chart. It was brutal on many of those days. Watching everything that you thought would work be decimated. That was the sharks in the water. Whipsaw. Okay, let's see. Any other questions? Microphones, vocals, typing? Well, we get a good overview today of the predator play. I want to challenge you to grab your favorite stock, your favorite time frame, or a Forex or whatever. Put that 200 on there, strip it of everything else, and just watch how many times the predators defend the 200 moving average. And if they do, high probability, how can you profit from it? Now, it's going to require you, in the onslaught, while it's breaking new lows and it's deep red, you become a buyer. It makes you the guy with the teeth chomping down onto whatever is coming into your mouth. It makes you the predator if you can handle that kind of trading. All right, so let's do that, and we'll look forward to seeing you on Tuesday. We'll keep going through more rules, more trading signals. I hope that that Predator and the Bounce 5 have blessed you tonight, and feel free to send me notes, questions, anything you'd like, WhatsApp, email, or Facebook. Feel free to send them to me, and I'll try to answer best of my ability. Okay, my friends, with that, I want to go out to eToro, get yourself a free account. Of course, I'm not paid to tell you that, but I think free charting and seeing their system is it's pretty nice for free. And if you decide to throw $100, $1,000, whatever, you can trade cryptos for almost nothing. We found the other night in trading cryptos, I took a trade on Bitcoin, and I think I put, if I remember right, I put $25. I put $25 down, and it allowed me to trade Bitcoin. I bought $25 worth, and I had tried a $50 worth. So I probably tried 10 next. And of course, we're in profit right now, but my $25 trade from last week is up $1.17. Not bad. That's beating the S&P 500. My $50 trade is up $2.47. That's beating the S&P 500. So pretty good trade. It doesn't look like a lot, but if you've got $100 to put in an account, you can be trading and practicing with real money with losses or gains of $1 to $2 or $3, and that takes the pressure and the heat off. So you're not needing to make $200, or you lost $200 yesterday and you need to make back $200 today. It's a lot of pressure a new trader doesn't need. Stick low if you're going to use real money, and this might be something for you to try. The last thing is, for all alumni, in my drdanieldaves.com, we hit Market Mentor. For all alumni, I'm offering a continued program. You'll see it right here, special. any alumni, if you would like to get out on 2 times a week, you want to trade with me, you want all the years of backup data, all of the classes that I've done over the years, you want everything I got, it's including now, which is really powerful, Telegram. I post, and others post all day long. So you might get 1 to 10 posts per day on what's going on, teaching, training, showing charts, and showing opportunities when it's time to start trading one way or the other in different markets. So anyway, all of that's $3.99 a year. If that interests you, I think you can click right there and it'll take you straight into it. Okay? Just to let you know, and basically this helps us pay the all the stuff that we pay for for the nightly classes and website, all of that, all the data host. It keeps you in as long or as short as you want to be in. With that, I'm going to say a great big good night. God bless you, and see you on Tuesday. Come on back using the same link I gave you. God bless.